actual cow. So,
The coffee mug.
who knows?
Yeah, I love my coffee mugs are my favorite things. I have them out actually. I have them displayed in my kitchen, and we've got my Wonder Woman mug. One of my favorite mugs I got from Montana, and it's a cowgirl, and she says it's so exciting not knowing what's ahead of you, right? And that's how I feel about my life. I'm
That's a good
excited
outlook.
every day, right? I'm excited every day that I wake up because there's opportunity every day. There are new people, new ideas. We were born to co-create. In fact, I mean, this has nothing to do with money, but it sort of does. I was on a call with Frank Kern yesterday. And if you guys don't know who Frank Kern is, he is the beginning person as it relates to online marketing. This guy is brilliant. You could Google him, Kern. And he said, Dan, if you were to start a business today, here are the top 3 areas people want help with. Number 1, money. Okay, this is an online business. You want to start an online business today? Money. Number 2, love and relationships. Okay. So I'm actually today kicking off, and Britt knows this because she's in this. It's a series for successful singles and successful singles who want to find their forever partner, and partnered professionals who want to maintain their relationships. So it's a 49-day challenge. So he says, and then number 3 is health and fitness, but he says the best way to start any online business is doing exactly what you and I are doing, which is gather a tribe of people, right, on Facebook, because a lot of our people are there, or, any social media platform, gather them someplace, and then invite them to show up with you regularly, like we're doing every Wednesday. My 49-day challenge, I'm actually in my Facebook group for we call it Manifesting the One group, where I'm going to create a video and an exercise for the next 49 days, and it will be in that book. And then, of course, if people want to take the next step with you, they say, hey, I'd like to set up a call and take the next step with you. So, that's what we're doing here. And these calls are like there's a phrase in marketing that's called all cheese, and I'm just looking this up, no whiskers. Okay. So this is all cheese and no whiskers. And the actual definition of all cheese and no whiskers is we're about, we don't do cold emailing, right? So what we do is we offer value. We're not pushing, selling anything. And when that person gets to the point where they say, wow, the amount of value equals what I'm willing to pay to go to the next level, then they say, hey, I want to set a time to work with you. So I'm so happy that we have 2 new people joining our tribe this week. So congratulations to those people. And let's get going on the call. We have a Facebook group with us. And boy, maybe you should just pull up the S&P 500 for the past week to show, I like roller coasters, and I particularly love roller coasters as it relates to the markets, because I know that we can make money in any market. I was talking to my husband yesterday, and I said, John, we rarely lose money. And he said, how can that be? Then every smart person out there, every professional out there, like, how are you smarter than most people out there? And I said, well, here's the thing. We make money in all markets. And for my long-term portfolio, I have a diversified ETF portfolio. In the day last week, when the Dow was down 2,000 points, my portfolio was hit. So that was a 7% hit. My portfolio was dinged like 0.45%. So if you don't believe this, I don't care if you believe this or not, but if you want to learn it, come to us. Like, this isn't bull, right, Dan? I mean,
yeah,
how do you describe it?
Yeah, I mean, how do you describe its validity? It's, taking
All
a defensive
cheese. And I'm
stance,
just looking.
taking the defensive stance, right, of being diversified, but also diversifying yourself with the way you're structuring your options, right, around your diversified portfolio, right? Number two, and then taking advantage of the opportunity in the swings either way, right? I mean, this isn't like, this isn't turn 10 grand into $10 million in a year, right? This is
Right.
protect what you have, grow it at a better rate than the market, and take advantage of some swing opportunities midweek, right? Um, and we've talked about that. We've seen that. We've done that over the last few weeks. We've done on the swing side. We've capitalized on American Airlines, among other things, for thousands and thousands of dollars. We
I
had
just closed out a 2-week Clorox vertical. It was a bull call. And I just put, let me see, was like 36.70 in my pocket for 2 weeks on
nice.
CLX.
Yeah.
Like if you want to look at that chart, bring that up, CLX, and look at like the past month. That's a pretty chart. You like that?
Yeah.
That's what I wrote up the past 2 weeks.
It's beautiful. It's a good 10% run, at least 15% run.
Yeah, pull up Bed Bath and Beyond too. BBBY. That was another one that we texted our group on. BBBY.
We had a great winner on American. We took another $3,600 out of that same trade, and we milked it again for $3,600 last week. We have had the SPX butterfly trades that have been successful, and we've had losers. We've had losers too. But by and large, the losers are fewer and smaller.
They are fewer and smaller. And when you're in our group, we show you everything we've put on, right? We are transparent. So, Dan, what do you got for us today?
Sure. So, a couple of things. We're talking about analyzing some short-term midweek opportunity. Okay, short-term midweek opportunity. I mean, what I'm finding is historically, for debit spreads, especially on the SPX, which is the major index that I've traded through my career, it's the S&P 500 index. Okay, so just think of it as the S&P 500, but they add a decimal place. They add times 10, right? And it's cash settled. So there's a multitude of reasons why. Yeah, there's a multitude of reasons why we trade the SPX, but we'll forego that for now.
I would just say great tax benefits. Also, you don't have to worry about getting assigned an ETF if the contract expires. So we love that.
And it's probably the most liquid options market there is. It was the last. I'm not sure if it's still floor traded, but this was the last one that was being floor traded still too. Where the guys, they're doing their hand signals and all that.
Yeah.
Knew a few of those guys. They all had a funny story on there what their tactic is. Well, really quick side note. One of these guys told me, his name was Don. He had a friend, and his strategy was he just wouldn't shower. Like that was like his strategy, because then no one would stand around him on the floor. He'd be able to do this. I don't know, like day to day, if that would be worth it or not, but I guess it was for him. Friend of a friend type story. Anyway, SPX. So historically, what I had to do to get decent returns and be able to enter these things cheaply on the SPX was go out 30 or so days, give or take 30 or 40 days. Now, keep in mind, and now we're looking at a VIX term structure. So just really quickly, this is
let's really break this down, because this is we are guided by this.
Yeah, this is the why behind this, the revised strategy that I'm going to take you guys through. And we did this a bit last week, last couple of weeks, but historically, right? Two things about volatility. Historically, in the last, if you average it over the last 10 years, the average volatility index of the options market, so this is the volatility of the SPY, but the average volatility would be somewhere around 14, 15, and that would even be a bit high. Recently, it was more like, 10, 11, right? And you can look at these numbers And if you don't know anything about options or what this is, think of it as how scared the market is. How scared the market is. These numbers are higher, the market is more scared than normal. These numbers are lower, the markets are more complacent than normal. So this is also a major, oh, not responding. You can still see my screen, right?
I can still see Vic Central, yeah.
Yeah, okay, good. So I got a thing that said not responding for a sec. So anyway, so this is also a major component of how options are priced. Volatility, or vega, is a major, I don't want to say it's the engine, but it's maybe the alternator on how options are fundamentally priced, right? If the market is more scared, options will be more expensive because options fundamentally act as insurance. If the market is more complacent, options will be then cheaper. Okay. So we're taking advantage of this elevated level by shortening the term of our trade. Okay, by shortening the term of our trade. We can, if we're essentially guessing where the market is going to be with trades in this manner. Okay, instead of guessing where the market's going to be in a month, wouldn't it be easier to guess where it's going to be between like now and Friday? Probably a bit easier. Still not a perfect science, but you can agree that would be easier, right? Guessing where the market will be between now and Friday versus now and next July 17th. And we can do that at a much lower cost to us because volatility is so high right now. So that's the major fundamental change that I've made in my trading in the last like 3 months, right? I mean, I've been trading for going on 10 years, and this is the big like difference that I've kind of started to wrap my head around. So it's kind of hard to learn new habits, right? As we all know, but for those of you that have not,
well,
really
you're not
such
an old dog, Dan.
That's true. I'm wise beyond my years. I'm stir crazy, but I mean, for someone coming in fresh, right? Just understand that there are strategies that will work now that will not work when the market goes back to normal. And the strategies that I've been trading personally, and most people have been trading for the last 10 years, don't really work now. So you're in a very unique time in the market where you don't necessarily have a huge disadvantage for being a new trader because effectively everybody is a new trader right now. This is different than has ever been.
And don't listen to those old dogs, by the way. There's so many articles, I'm sure you guys have seen them this week, about how millennial traders are, beating the Warren Buffetts out there. And, there's all this propaganda that, oh my gosh, they're going to be sorry in the end. But what we're doing is we're la femna quita. We are assassins, right? We go in, we make a decision, we take our profit, and then we make more money. That's what these amazingly, volatile times are offering us, right? So yeah, let's look at Mr. Warren Buffett and the decision.
This sums up exactly what you're saying, right? Big, pumped out in the news. Everybody who knows anything is selling all of their airlines. May 3rd. This is May 3rd. This is like a month ago. Selling all their airlines, and the implication is, you're an idiot if you're holding your airlines. They're all going bust, right? Okay, time for us to enter an airlines trade long because this doesn't really factor in at all to any of our thinking. Not that we're automatically going to do the opposite of what Warren Buffett does, but this does not have anything to do with anything when it comes to news. FYI. So May 3rd. Let's watch what happened between May 3rd and now on American Airlines, which, by the way, we cleaned up on.
Oh my gosh. We're still cleaning up on it.
Still cleaning up on it. This is May 19th. Yeah.
I see some ladies on the Facebook group. Hello. I'm not going to say their names, but they're my dear loves, and they've been here a couple of times. And I just want you ladies to know that we're awesome traders. We love you men, but sometimes your ego gets in the way. Dan, how awesome are ladies? Am I your star student or what?
I think so. Yeah. I mean, ladies are typically they're typically better at admitting when they're wrong and getting out of a trade. I know firsthand. I've looked at a trade and be like, no, I'm not wrong. And then I'm wrong. And then I'm more wrong. But anyway.
So join us this Friday, optionsforwealth.com.
Yeah, no, yeah, for sure. Do you want to talk about that real quick, or do you want me to just finish this up?
Yeah, I just want to jump in and tell everybody, optionsforwealth.com. Just go to that URL now. We are doing a free, and again, it's all cheese, no whiskers. It's all value. It's all teaching. We're not upselling anything. 3-hour Options 101. You will come off of that call empowered, excited, and determined and eager to create an additional, revenue stream. I'm making thousands of dollars more a month since, we've been doing this together, Dan. I mean, I can get specific and I can sleep at night knowing that my ETF portfolio is not going to get rocked, whether the Dow goes down 2,000. And if it goes up, I'm making money on my 1 to 2% a month on my covered calls by selling contracts. So guys, I want to create a world where nobody needs to worry about money ever again. And people are done paying financial advisors who frankly do not know what we're teaching right now, who are just selling you products so they can, rent their Hamptons houses and buy more Range Rovers.
I think the jig is up in that business. I think.
Yeah, the jig is up in that business.
In the next 20 years, that is going to be
because, I'm 56 years old. My dear friend Dan is a whole lot younger than me. His generation will, look at people who give their money to somebody else, who look at their portfolios for 1 hour a quarter and pay them 1 or 2% on there. And they say, you're crazy, Dad, you're crazy, Mom, or you're crazy older auntie, right?
Mm-hmm.
So that's my public service announcement. That's Dawn's PSA for the day.
But seriously, I mean, if you have any questions, right, join us on Friday, and at the worst case scenario, it's 3 hours of your time. You learn some stuff, and you decide it's not for you. That's all.
All right, this is a gorgeous picture here.
Let's talk about it. Okay, let's look back at it again real quick.
Yeah.
May 3rd. Fake news media says, Warren Buffett says, hey, you're an idiot if you're still holding airlines. Blah, blah, blah. I'm the best investor of all time. We get in. We fall on May 3rd. We fall a little bit. We fall from
whatever. What is that?
Whatever, 10 a share to 9 a share.
Now tell everybody we got in. We bought the 12 strike call.
The 12 calls.
And we're out until what? January, November.
November. We bought the 12 calls. So that means
tell everybody.
For every call that we've bought, I bought 25 of them.
I have 10.
For every call that we bought, we make $100 per contract per point above 12 by expiry. We also did a few other things in selling calls against it.
We won't go into that
right now, but it's a long play. And so look at this. Warren Buffett sells. Sure. Nothing's happening. We're just holding. Our calls are there. They're making a bit of money. They're losing a bit of money. It's more of a break-even trade at this point. Then they come back to life, and they start to become fairly profitable. Then they dip back down, right? Everybody panic sells the pop, right? And we're still holding because we're holding till November based on our contracts. And then we have the big swing. Swing. And now we're kind of chopping around, but so 25.
We got it until November.
Yeah. So to give you an idea, so 25 times 100, so 25 contracts, times 100 points per contract times say 5, so 17, the difference between 17 and 12 is about 5. That's the type of return you're targeting, right? On a risk of $3,000.
Right. So you're only tying up $3,000, right? That's the most you would ever lose on this. Mm-hmm. And for every point you go over 12, you're making $2,500 for every point over 12. We're at 18
By November.
06.
Yeah, by November.
By November.
Well, we got some time left too. Is the other thing.
Yeah.
But anyway, I just wanted to bring that up, in the whole, and that's it, right? And this is how this game works. Joe Schmo, I'll think of my dad. Like my dad would read his financial news, his newspaper or whatever, and this would be in the newspaper, and then he would call his broker and say, "Oh, I read this thing. Sell all my American Airlines." Right? And then what happens? They buy it back. This is the news article that they're not going to tell you. This guy probably bought it all back after it dipped. Right? So, that's the game that we're trying to sidestep, because we're not playing that game, right? We live outside the game. That's what we're trying to do. We live outside the game. But anyway, let's talk about some trades we're looking at for this week, because that's why we're all here, right? So I
want to make more money this week.
So ignore this stuff. This is just some other stuff I have going on.
Because the stores opened up. I could go shopping again, Dan.
Hey, you can shop right here. Let's shop for some butterflies.
Okay.
But anyway, so let's do a little 2-day. We've had some success with these in the past. We've put out 2 of them to the group. One of them has been, was profitable. It made, what did that first butterfly Dawn make? About $7,000?
Yeah. So it was a 2-day butterfly. It cost me $3.20 to get in.
I need 5 contracts.
And did I do that? And then a contract, and I sold for $16.45 a contract. So
fantastic.
Do the math.
Fantastic return. 500% almost, 400%.
Yeah, it was like in 2 days. What was that? Like a 400%, 500% return. And it was so exciting. I still have this picture. I have this picture on my wall of what that butterfly looked like. And we were like, yes, yes, yes. And woo! This is fun, by the way, too. If you haven't noticed, Dan and I have 2 different disc styles. That's why we get along so well. I'm the excitable influencer, right? So I am enthusiastic. I am results oriented. I take action. And Dan is very measured. He is a conscientious, dominant. So I think that's what makes us fun too, Dan.
We're both results
oriented.
Got
something for everyone. Yeah, but we're both results
oriented. But we kind of lean on different sides of that spectrum. So a butterfly. We've talked about, I'll go really quickly on butterflies, and then we'll go into the trade.
You're so organized, Dan. I'm so proud of you.
Butterflies. There we go. Thanks. It really helps because, and originally when we first started doing this, Don, I was building all these slide decks, and now I'm not really building new slide decks. I'm just kind of going back to the ones I've already built as I talk about different things.
Yeah, I need to do that with Google.
Really quick, everyone. Legal statement. I'm going to show you a trade that I'm looking at. This is not a trade recommendation. I'm not a broker. I'm not a financial advisor. Trading involves risk, and you should speak to an independent financial advisor if you have any doubts.
If you doubt anything that we are saying, exactly. If you doubt anything that we're saying, speak to a licensed financial advisor, and they'll probably tell you those people don't know what they're doing and they're crazy if they tell you they got a 500%. But you know what? I will show anybody on this call my own personal Thinkorswim account.
So really,
we're all we're total transparency, right, Dan?
Yeah. And that being said, I need to clean up our trade log, but yeah, everything we're putting on, we're posting in our WhatsApp group, we're posting to our group. We're talking with management, so on and so forth. I think one of these 10 would have called us out by now if we were. We
have somebody on the call right here that's with us who said he feels so empowered with, with what we do with our group. So was a big compliment for us this week. Thank you. Thank you.
So a butterfly, really quick. What we're doing is we are buying. You still see my screen, right? Mm-hmm. If we're going to project that the market will go up above current price, we're going to use calls. If it's going to be below, if we're going to guess that it's going to go down below current price, we're going to use puts for this purposes.
So I'll just say bullish calls, bearish puts for the butterfly strategy.
For most strategies that we do, it's going to be that way, but butterfly is no different. So in this case, we're going to do calls. And how the structure of a butterfly looks is that we are essentially guessing a range. We're going to build this tent looking thing, and we're going to guess that price will land in this tent by Friday somewhere. And this tent can be as wide as you want. The wider you make it, the more expensive your butterfly is to enter. So, keep that in mind. And we're going to do a few different ones and just kind of show you start to finish how I'm going to build this thing. But it will be buying a call on the lower end, selling 2 calls in the center strike in the top peak of the tent, which then becomes our most profitable, point, right, at expiry. And then buying another call on the outer leg. The distance between this leg and the center is symmetrical to this leg and the center. So if this one is at 3,000 and this one is at 3,100, this one is at then 3,200. Okay, if this one is at 3,000, this one is at 3,010, this one will be at 3,020. So
symmetrical.
Yeah, so for now we're doing symmetrical butterflies. I'm a big fan of non-symmetrical butterflies also, for the record, but they tie up a lot more margin. And for newer traders, they require more management, and we're just not there yet. Okay, we'll get there. But for now, it's just a basic butterfly. They're a debit spread, meaning you can only lose what you put into it. And they're great for high volatility markets because they're cheaper in high volatility markets. We like things that are cheaper. The Greeks, we don't have to really go into the Greeks too much right now on this. The one I'll call attention to, though, is that they have a negative Vega component, right? Meaning if volatility falls over the term of your trade, you'll see profitability there. That's really the only major one I'll bring in, and that's good, right? We typically live in a falling volatility environment, right? Volatility is falling, well, not in the last 5 days, but in general, and you can see here, this is what I referenced earlier about how we're at a higher volatility than usual. Volatility is typically downward sloping.
So we're looking at a chart of the VIX. And Dan, explain the VIX to those people who are watching us.
Yep. So the VIX is I guess you could say the scaredness index of the S&P 500 specifically, which is effectively the scaredness index of the market. It measures the demand for out of the money puts and calls. So the demand for insurance, right? People buy.
So it measures
options.
the demand for insurance. Yes. Yeah.
Insurance. And you think of, if someone is just strictly buying puts on their portfolio, it's effectively acting as insurance for them, right?
Yes, which would have been a great thing for people to have been doing. Mm-hmm. And that's something we'll be speaking about in our Friday call, how to insure your long-term portfolio. So,
yeah. SPX. So we're going to build a butterfly. I'm going to build it on the SPX. We typically do butterflies on indexes because they are cash settled. If we land in the tent of the butterfly, we don't need to do anything. We don't take stock or anything like that. We're just making money. That's how we like it. Nice and simple. So on my analysis, right? My analysis, for better or for worse, could be wrong. Could be wrong.
The options, man.
Don't have a crystal ball, right? But the reason why the butterfly is attractive right now is that on a short-term trend, it's a 5-minute chart, so this is 5 days of data. Mm-hmm. We're really pivoting sideways. So, right, we had our highs yesterday, so we had some highs yesterday. We tanked quickly, then we recalibrated, and you see how we haven't broken the highs, right, of this point, and we haven't broken the lows. I guess you even use the candle of this point, mm-hmm. right? So that tells me that, at least short term, at least like for right now, for the time being, we are in a sideways trend. We are in a sideways
trend. Everybody say yes in the comments, and we We also would love any questions from you guys too. This
Yeah,
isn't a
yeah, no, feel
one-way
free to,
street.
yeah,
So
feel free to.
I'm watching the Facebook group. I'm watching the chat that we have here. So do not be shy. Ask questions. Options have changed my life.
Who's saying that? I missed the.
I
I can't
said
see the
that.
chat. Oh, you said
I
that. I
said,
thought that was.
I said
That was from the
options have
chat.
changed my
Um,
life.
that was from the chat.
And Britt would agree with me.
Yeah, I think so.
Andrew would agree with me.
So, all right, sideways trend, right? So we want to do something that it takes into account this sideways trend, right? But also we're going to widen this out and just look for a bit of a longer term, see what the longer term trend is. And the longer term trend is, still pretty choppy, right? I mean, this was an uptrend, right? This part of it's an uptrend for sure. But then we really tanked, and we haven't established new lows since we fell. We haven't established new highs. And until one of those happens, this is a sideways trend. Now I say that, and the market will drop by 300 points tomorrow, but well, that's part of it, right? I mean,
You mean the SPX? You mean the SPX 300 points? Yeah.
Yeah. I talk about the SPX as the market, as the.
And Andrew has a question. So the sideways trend is about a day and a half long. How do you gauge whether it will continue to Friday? So that's what Dan's showing us right here.
Yeah. So, and again, right, like I don't know for sure, right? Nobody knows for sure. The thought is like, if I had to put a bet on up, down, or sideways, I would put the bet on sideways to maybe a little bit up because of this gap here. Gaps typically get filled on the way back, right? So this gap down, it means it's more likely to trickle back up through that gap, and then being very wary of, right, remembering where the cliff is, right? I mean, we fell off a cliff here. So, my guess, right, is that we'll trickle back up to here and then fall again to wherever. But this is a 2.5 day trade. So it's not going to be that expensive. If we're wrong, it's okay. And if we're right, we'll make some money.
And I'm getting in on this because we're going to have our class on Friday, and it goes from noon Eastern to 3 p.m. Eastern. So everybody who will be with us on the class will see how this trade is doing real time.
Yeah, it's always nice if we can show off a winner.
I know. I love that.
All right, so Billion Butterfly, right? Call side, 2 days away. I chose 3180 for my center strike.
And why did you choose that?
Because I think price is going to trickle back up to here, 3190, and I want it to be in my tent.
Okay, so it's that circle right there.
Yeah, well, yeah, this circle's a bit. I circled the resistance area, but yeah, it's just below the circle.
So that's 3190. Okay.
And again, right, we're going to shop around. I'm going to look at one of these, and I'm going to see if the price is right. If not, I'm going to wiggle it around. Right, we do our macro analysis on the chart. Right? We do our macro analysis on the chart, and then we fine tune it in this screen, right, with the numbers. It's almost like we're doing the coarse grind sandpaper and the fine grind sandpaper, right? You gotta get all the crap off the wood, and eventually you have this piece of kind of janky looking kind of sanded wood, and then you get the fine sandpaper and you make it into a nice smooth whatever. I used to be a carpenter.
Oh, I didn't know that, Dan.
College.
He's a Renaissance man.
Yeah. I built horse stables.
Wow.
In college.
Britt, is that amazing or what? Dan built barns.
I know.
She said amazing. You never cease to amaze us, Dan.
You know, man of few words and many talents. Just kidding. Okay, let's go. Let's look at this butterfly. So this one,
Okay.
so this is how I built it. I've done it 30 points wide here. 30
Okay.
points wide. 30 points between 3150 and 3180. Right, 30 points between 3180 and 3210.
Got it.
Now, what price are we looking for something like this? This is a bit high. This is a bit high.
$4.45. So that
Yeah.
that would be what we would have to pay per contract times 100.
Exactly. So like, you know, if I did, you know, 4 contracts, right, I'm paying $1,740. If we land right at 3180, I'm profiting $10,000 above my 1680. But, you know, you can't really evaluate these trades on like the max, whatever profit point. This is like a bullseye. Like a
Which, by the way, the last time we did this, we almost we were $1,000 away from the bullseye.
We're pretty close to the bullseye last time, but you know, look, instead, what are we doing here? There we go. And this doesn't really do a good job of it either, but the idea is that, you know, if we're between 3160, say, and 3200, then we're profiting $2,200 on this. And if we're closer to the middle, then it's more. So
and by the way, we just let this run until the end of the day. You do not have to manage that.
yeah. We learned that the hard way.
Cash settle.
Yeah, I mean, the option to get out. So if you're going to get out of this trade early, you make the call Thursday at like 12:50 or Pacific time. So like right before the market closes. If you're going to get out early, if you don't have to. I didn't last time. I regret it. I could have made money on the last one and I didn't. But keep that in mind, right? For exit, it's the day before, right at the end of the day, the day before, and you can still get about an 80% return on your money in a day. So, I mean, that's not too shabby. So I'm going to play with these numbers to get this to be a little bit cheaper. Okay. And we'll also look at one below if we want to do it that way. You know, for anyone that is, you know, has a downward preference. I mean, I think that the issue with the downward preference would be that, you know, we have a big support level here. We also have a big support level here. Whereas this support level is a bit further away. This resistance level is a bit further away. And we can also look at one right at the money.
And I would also say one of the factors that that happened 2 weeks ago on Friday was that crazy report, the earnings report. So one of the things we want to do also is check to see if there is anything on the fiscal calendar that would swing, you know, would drive intense volatility, right?
Exactly. And so here's the option to do it right at the money. Right at the money. The current price is 31.27. My middle is 31.25. Can't get closer than that. And you know, frankly, given the trend we're in, it wouldn't be that bad of an idea to do it like that, because we're just kind of bouncing back and forth here. I mean, hey, who knows what happens between now and Friday, given the current market conditions, but given the chart analysis, I mean, we all kind of talked about it. I firmly believe this is a sideways trend. There's a lot of economic calendars online, Andrew.
Yeah.
If you just type in Bloomberg, maybe.
Yeah, Bloomberg has a calendar, right? I'll put the link in there.
Calendar on. Market watch.
There you go. Market watch. So let's take a look and see what's going on, right? Ed Vice Chair Randall Quarles speaks. Jerome Powell speaks at one.
And really, there's always something going on, but what you're looking for is, interest rate adjustments, interest rate announcements, jobs numbers, right? This is not jobs numbers. Anyway.
I don't want to digress, but
Yeah.
that always comes into play, and that was a major factor a couple of Fridays ago.
Yeah, we didn't expect that for whatever reason, furloughed workers are not counted as unemployed, among other things. Among other things, so really just fudging the numbers there, in my opinion. Anyway, but yeah, so I think the play here is at the money. Frankly, it's cheaper. We're trending sideways, and we're trending sideways.
Okay.
And
so you're saying like 31.30? Yeah.
Yeah, you can even go wider if you like. It's a bit more expensive, but
I like them a little higher and tighter.
Yeah, and if you want to go further away, it would be into this area you would go to. I wouldn't go above this 32.23, but maybe like having 32.10 as an outer leg. And this is the method, right? It's just shopping and shopping and shopping and playing with the numbers and playing with the numbers,
and we show you how to do this.
That's how you do it.
Yeah, and you're going to get super adept, like that word, adept at manipulating Thinkorswim, and it becomes like second nature. It really does. It's like riding a bicycle. What Britt and I call it the options brain. Your options brain clicks in, and then all you do is eat, drink, sleep. Like literally, I dream options. I can.
Hey. Sorry I couldn't join earlier. Just jumping on for the last couple minutes here.
Yeah, no problem.
Yeah. We're showing a trade that we're going to put on and follow in our complimentary 3-hour intensive that we're holding this Friday, optionsforwealth.com. Join us. Dan, I want to say we have a group on Facebook that has been with us the entire time. So
nice.
I am so happy, and they're a group of dear friends. And we'd love for you guys to join us on Friday. And we're going to go into the nuts and bolts of options, look at some trades.
Yeah, we're going to go back. Like, we're going to get back to the level of
basics.
I don't
what's
know
a call
what
and what's
right.
We're going to go back to what's a call, what's a put. And by the way, that helps me. Like, what's great about options is you can never, like, strengthening the foundation is always a positive thing. Always.
Yep.
So Don, this is the butterfly that, it would be a bit higher.
Okay. So what are we going to do? This is an idea. We are not giving you advice. This is an idea. So we're looking at 31.85. Yeah. At $3.
Yeah. So, and that's the range we want to be in, around $3. Okay. So let's talk, let's discuss the pros and cons of this trade, right? The cons are, if we have a down day, either today or tomorrow, you're pretty well out of the trade, right? Like there's very low likelihood that we're going to, go down 30 points and then rally up 100 and whatever plus, right? So directional trade, for better or for worse, it's directional, right?
What does that mean, Dan? Say a little more about that.
That it's directional?
Yeah.
So versus a market neutral trade. So a directional trade, we're betting red or black.
You're betting one way or the other. Okay, got it.
Black. Now, unlike a casino, it's not a 1-to-1 payout. It can be like a 5 or 6-to-1 payout. But this is effectively what we're doing. Like we're saying put it up here. We're saying it's going to go up.
Yeah, current price right now is 31.26. So we want to see price get to the range of 3160 and 3210 over the next couple of days. So that's what we mean. We're bullish
Inside the tent.
Inside the
right?
tent,
You
right?
got it.
That's
Yeah.
that's inside the tent. So that's where we're making money. And so what we're saying is we're bullish. We're, subtly bullish on the SPX.
Short term, very short term.
Very short.
That's 2 days.
You like that? Subtly bullish.
Yeah. and that's it, right? I mean, like, so we need, what it comes down to, right, is we need 40 points. We need 40 points in the next two and a half days, right, to be profitable on this. But not
Now, as soon as in the next, since it's so short term, as soon as it got up in there, would you just cash out?
You could.
You got in the money?
You could. You cash it out for about $900 profit.
Right.
So if you got anywhere near the top of that pyramid, you'd cash out.
You could.
Well, not Dan and I.
I didn't say I would.
Not Dan and I.
But you could. You absolutely could. And Ken, that goes back to it. And we haven't had we haven't had a one-on-one yet, Ken. But we'll talk about your trade plan.
Okay.
Right? Because a lot of this has to do with what is your overarching plan.
Got it.
Right? Because if the thing about baseball, some guys hit singles and some guys hit home runs and strike out a lot more. Right? So it's whatever your overarching plan is.
Got it.
But we'll talk more about that. But absolutely a valid strategy, because realistically, if this goes here tomorrow, you're making $1,000. I'm investing $1,200. I'm profiting $900. So it's like, I'll get out. This is a 75% return.
Yeah.
A day and a half. But anyway, I digress. This would be how I would frame it on the upside. On if I was going to go to say I want to go to the downside, right? I might go, a little bit lower, maybe 3080, 3120, 3160. So you see how much more expensive the one to the downside is? All right, it's 570 versus 310.
Meaning, but what does that mean? That means kind of the market sentiment is that it's going to go down?
Well, puts are always more expensive.
Okay.
Puts are always more expensive because people buy them through, like, the emotion that people buy calls with is greed. The emotion that people buy puts with is fear. And fear is a much stronger emotion than greed. So for that reason, inherently, the demand for puts is almost always greater than the demand for calls. And furthermore, the skew of the demand for puts.
Wow. I'm going to go back and re-listen to that last statement on the video. That was profound.
And the second part of it is, furthermore, the demand for puts skews further away from current price than does the demand for calls. The put skew is a more flat, gradual curve in terms of its demand. The call skew drops abruptly after about 2 standard deviations.
Okay.
Nerd fact for the day.
You don't really see that in that particular chart, do you? Or do you?
Where you would see it is here. Where you would see it is here in the prices. So let's go 200 points away. Let's go 200. Let's go out. Let's go out to September. Okay.
Okay.
And let's go. Sure. Let's go 1,000 points away.
So you're going 1,000 points.
1,000 points to the downside.
Okay.
These puts cost $1,700 each. They'd be great to sell. By the way, this is a great long-term play to sell these guys and buy something back here, right? The market would have to explode to get down there.
Right.
In a bad way, not in a good way.
Right.
So, okay, we're 1,000 points away on the puts. The puts cost $17.
Wow.
We're 1,000 points away on the calls. They cost $1.
Oh my God.
Right. So that's the visualized representation of guess, the human mind, you could say, and in terms of the way that panic works.
Wow.
Fun stuff, right?
Wow,
Yeah,
that's amazing.
and that's why the market is what the market is, because people, fear is stronger than FOMO, right?
Right, right.
So there are two fears, right? Greed actually is the fear of missing out.
Right,
True.
right.
All
Yeah,
right,
that
so let's
fear
get
is
this
right in
trade
there.
on. Let's get this trade on. So we're looking at 315, 3160, 3185, 3210. Okay.
I'm happy with that.
All right.
You're gonna put this on simulated, and then we're gonna look at it on Friday, right?
Well, we're putting on it real deal, Dan and I, but you could put it on simulated.
Oh, well, yeah, I see you're in simulated now, so
Yeah, this is just
Oh, yeah.
and this is just the dummy account that I use for the class.
Yeah, but we'll put it on both. Yeah, and what I want to do now, Dan, is open a recent. Where am I? Open our presentation and just show people about Friday.
Yeah,
About
here.
Friday.
I'm gonna fiddle with this. You share and take over.
Yeah, let me do that. Okay, so optionsforwealth.com, optionsforwealth.com. Please. I'm just going to pull up one of our last presentations here. Let's see. 8, 5. And all right, I can't find the presentation, but let me just be really, optionsforwealth.com. You go there, you get reminded that we're doing a 3-hour this Friday, noon to 3 p.m. Eastern. And we're going to take everybody through the basics of options. I'm going to actually do something on long-term portfolio. I was saying earlier that I was speaking to somebody yesterday about the fact that when the market was down, Dow was down 2,000 last Thursday, my ETF portfolio was hit 0.45%, where the Dow was down 7%. And they couldn't believe me. They said, I don't understand how you can be safe in all markets. Well, we're going to show you what that's like. This is what your brokers don't want you to know, because you would never pay them if you knew this, because it's so easy. And it's an opportunity for you to have a goal of a minimum of 1 to 2. Like my goal is 2% a month return on that portfolio. That's 24% a year. That's my goal. That's what we managed to. So we're going to talk about that because options are expiring this Friday. So I'll actually show you my specific portfolio where I did this and how I think I'm now I made 2.8% on this portfolio 1 month. So that's amazing to do that over a 12-month period, especially in the volatile markets that we're in right now. So also, if you want to be a part of our group, any people who are on the webinar are here, part of our group. I know where there are a lot of Facebook people who are options curious. So we have a membership fee. And with the membership fee, you have a Monday call where we all roll up our sleeves and ask questions and learn together. We have an online learning portal. And we also have a WhatsApp group. So every single day we're sharing trades. Like I shared Bed Bath & Beyond, it was up 10% in 1 day, right? So Dan and I subscribe to many services where we're sharing ideas that high-level professionals are sharing with us. Clorox, I just got out of Clorox today for a $3,600 profit without tying up so much money in 1 month. So these, and yes, there are trades that go down or sideways, and we'll show you those, but they are few and far between because we are managing trades and we are keeping our finger on the pulse of everything for you. So you could go out in the world and do all the work that you do and report, to the business that you're about from a 9 to 5 perspective while profiting with us. So that's my invitation to all of you here. Please, optionsforwealth.com. And if you have friends that are options curious, just send them the URL, please, and invite them. It's a party this Friday. It's a money-making party. So that's all we have. We're going to say goodbye. Thank you for being with us, and we'll see you on Friday.
See you Friday.